Good day, everybody. Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com. Welcome to Earnings Call. Each and every week, we talk about stocks that are declaring their earnings announcements. And we talk about not just what to expect, but we talk about how to make money from those earnings events. And this week, the week of November 3rd, 2025, we have an absence of robust economic data just because of the government shutdown. So all eyes will be on earnings, their outcomes, specifically their forward-looking guidance, and that zeroes it in because that's really all that's available. So sit tight. We're going to go through our list as we do each and every week, and I have some new trades for you. So everyone hang on. Here we go. All right, don't forget we can use the chapter feature to learn a little bit about each and every one of these stocks that we talk about. We don't talk about the complete list. And also to note about our list is I highlight the best opportunities of both volatile and quiet stocks each and every week. So there may be a stock that you're very familiar with that doesn't make our list. And it's not that it's missed or not warranted. It just isn't probably the best opportunity. All right. And we'll talk a little bit more about that as we go through our list here. But here you see our stocks for this week that we're zeroed in on. There's about 600 and so companies declaring earnings this week. We're focused on about 40 of them. So you can get an idea how we really start eliminating stocks because of either stock price or maybe their option volume or lack of that. Because we do trade options around these companies through the earnings announcements. And again, highlight the best opportunities that we have. So I divided up into breakout and quiet. Breakout are the exciting stocks that move anticipated moves over 10%, and then quiet stocks on the right-hand side. So let's begin with the quiet stocks this week. And let me start you with an example. Now, last week, Pfizer declared earnings announcement. This stock is a notable quiet stock. You can see here that it's trading within a $10 range from its high last year to where it is now. And I have an ellipse circled around the earnings announcement, and this thing moves 1 to 3% on average. In fact, less than 4% over the past 6 earnings announcements. So that's what we call a quiet stock, something that moves single digits through their earnings announcements. And what we do here is we like to sell premium going into those earnings announcements. We do it through a strategy called an Iron Condor. All right. We don't do anything naked. We don't sell naked calls, naked puts. We always hedge them by buying something with it. Okay. So an Iron Condor is kind of the preferred method for these. So let's get into our list this week. We're going to begin with Occidental Petroleum. And you can see some familiar names and some names that you're not familiar with. But if we go to the chart, we'll go through and talk about some of these that are the best opportunities for non-movement this week. And as I mentioned, we start with Occidental Petroleum, which will announce earnings results later today after market close. The average move here is about 6%. So it's in the mid-range of what we call quiet. And we don't expect really a big move from this. You can see it looks, like it's got some volatility here, but my chart is in $2.50 increments. If I move it to $5, you can see that it really smooths out the stock chart a bit. So we do expect only about a 6% move for Oxy going into their earnings announcement after market close today. Moving forward, we have Amdocs that will declare on Veterans Day, which will be tomorrow, Tuesday, November 11th. By the way, happy birthday today to all the Marines out there. The Marine Corps birthday is today. All right. But tomorrow is Veterans Day. So that's November 11th. And we have Amdocs declaring after market close. The average move here is about 6%. Now, stocks over $50 are really preferred with this strategy. Okay, they have just more premium in the options. The more expensive a stock gets, ideally 75 and above, are really good for this strategy going through earnings. But definitely an $85 stock will play nicely, and we're looking at, again, a movement of single digits going into that earnings announcement. Okay. All right. Now, a more notable stock this week that will have earnings is Cisco. Now, Cisco will have its earnings announcement on Wednesday, November 12th, after market close. The average move here is about 5%. So you can see here, this is a $70 stock, and we are looking for really a quiet move from Cisco. You can see the past earnings announcement. This is really about a 2 to 3% move right here on that last earnings announcement. Even though it looks volatile, my scaling here is in $2.50 increments. So you can see here, even when it gaps, it just doesn't move very much. The volatility seems to have increased about 1 percentage point. You can see back here in May that the estimated move was about 4%. Now we're anticipating about 5%. So yeah, it's picked up volatility a little bit, but not very much. All right. So single digit mover for Cisco Systems. JD.com is a popular stock, even though it's kind of come down here. And it is a $30 stock. They will declare on Thursday, November 13th, before market open. The average move here is about 6% for JD.com. And again, looks to be kind of volatile, but my scaling is in $2.50 increments. You move it to $5, and you can see that the stock just does not move very much, even through the earnings announcement. You can see the last one back here in August, stock barely moved. We go back to May, stock really didn't move very much. So quiet stock. What happens is implied volatility in the options begins to rush into the pricing. So these things get expensive. Okay. Options will be more costly. Okay. Have a higher price because of this impending event. That's why we like to sell premium on these stocks that don't move very much. We'll close out the quiet list with Disney. Walt Disney will declare on Thursday, November 13th, before market open. Now, the average move here is about 8%. However, I would anticipate a little bit more volatility right now because of the disagreement with YouTube TV and the cancellation of channels off of YouTube TV. I know a lot of people that have been negatively affected by this and are not happy. Okay. And this, and the consensus right now is anger towards Disney and ESPN. So there could be some additional volatility. It'll be interesting to hear the conference call and what the CEO says. They, I'm sure, will address this later in the week. And it will be interesting to hear what they say, because right now a lot of people are not happy and they're looking for alternatives or just not watching that content. And that is not a good thing for a content distributor when people give up on the content. All right. Okay. So that is our quiet list for this week. Let's get to the ones that are exciting. Okay. Each and every week we talk about breakout candidates. And you might be wondering, what is a breakout candidate? Well, these are stocks that move more than 10%. They move double digits, and they do so on a regular basis. What we like to do with these is trade straddles or strangles. And yes, implied volatility has rushed into these options. The options are expensive, But what we're doing is looking for mispricing, which, yes, still occurs. All right. And taking advantage of a potentially big move when the options aren't priced quite where they should be priced. All right. So let me show you an example of this. An example of a breakout stock is Akamai. Now, Akamai does not have earnings this week. They had earnings last week. And I have the ellipse around that earnings announcement. You can see that Akamai went from about $72 a share and closed out the day after earnings at $86 a share. All right. So big moves. This stock averages about 13% each and every earnings cycle. That's the average over the past year and a half of earnings. So this is a consistent mover. In fact, a good stock that we do like to trade when the opportunity presents itself. Okay. That is why we like to trade straddles and strangles that capture this big movement on these stocks. You'll see an example of that here towards the end of the show. So stick around. I'll show you an example of this that we did just last week for our trade of the week. All right. Now, moving on here through, if we go to the charts, you will see that we start off here with Monday.com. Now, here's the thing. Monday.com had earnings today. They had it this morning before market open. The average move here and what was priced into the options was a move of 25%. However, you can see here the stock is down, and it's down double digits, down 14%. Now, 14% does not equal 25. So if we had done a straddle or strangle on this stock, well, we would have a losing trade because, the options are priced for that 24, 25% move, and it didn't move that much. Okay. So this is why you have to be very careful what industry, what sector is the stock trading in? Is it consistently a big mover, etc.? So we'll see where it settles out. But right now, the stock is only down 14%, and is not meeting that estimated move. So that's what we have to watch out for on these. Now, believe it or not, Monday is actually a busy day. We have quite a few breakout candidates. So in addition to Monday.com, we have Rigetti Computing. Now, what's interesting about this stock is they will declare, they declare today after market close, today, November 10th. The average move here is about 13%. Now, that's not so interesting, but what's interesting is take a look at really since September. In fact, the volatility, the average volatility of this stock has increased. Let's see there. Tuesday, June 12th or August 12th was their last earnings announcement. So that was right there. That was okay. So now the volatility of this stock, the average daily move, you can see how the candles went from being somewhat small to getting bigger and bigger and bigger on average, finally crescendoing here and then pulling back. So the daily volatility of this stock is what's really capturing market makers' attention. And they're pricing it in right now for a 13% move. So anytime a company like this, it mentions the words AI or the letters AI, and they put that into their outlook, then you could expect a little bit more volatility. Now, I priced this out a little while ago. They are pricing in, market makers are pricing in that 13% move. So there is no edge. This would be a good one to watch, okay, going into their earnings announcement. Another good one to watch being talked about a lot on financial television right now is CoreWeave. All right. They will declare today after market close. That's November 10th. The average expected move here is 14%. Okay. Now, this stock does tend to be pretty volatile. You can see on the last earnings announcement, I believe that was about 11% move. the day after earnings, and then followed by another double-digit move. Okay, so this stock can really react around the earnings announcements. We do see a little bit of volatility going into the announcement, but again, I priced this out. It's being priced in for actually about right at 14% move going into earnings. All right. So again, another good one to just kind of watch and not worry about trading. Just keeping your eye on it. Don't be surprised if it moves up 12, 13%, or even 15%. Again, we're looking for that edge. All right. Now, AST SpaceMobile. Always loved the name here. This is historically a mover as well. They will declare again today. Lots of movers today. Monday, November 10th, after market close. The average move here is 19%. And again, another one that's priced pretty well by the market makers. They're expecting a big move. And you can see that this stock literally went from 50 to 100 in about 3 weeks, and then pulled back, went from 100 up here down to $70 in even a shorter time. So this thing can move around, and it will through earnings as they announce their guidance and what they're looking at moving forward into the fourth quarter of the year. All right. Moving on, let's get through the rest of the week here. We have Oklo. OKLO is the symbol. They will declare Tuesday, November 11th. After market close, the average move here is about 16%. All right. Now, this is also a historic mover. We like trading this stock when the opportunity comes up. All right. This stock will tend to be pretty darn volatile. And interesting here is I don't know if you notice here, but we have this little head and shoulder pattern there. There's the one shoulder right there. There's the head up here, and then the other shoulder over here. All right. And there's a way to measure what the move is after that formation comes into play. So there's all sorts of things going on with Oklo, and we are keeping an eye on that. Another one that we're keeping an eye on that was a hot stock and is not now. All right, is C Limited. All right, SE is the symbol here. Also had a head and shoulders pattern before the big fall here. The stock has gone from almost $200 down to $155 pretty quickly. And we will kind of keep an eye on it. You see the last earnings announcement here. That is the earnings announcement. I don't know where my marker went right there. That is the earnings. And it was either the 11th or the 12th on this. But they will have their earnings later today. And my little box didn't appear. Let's get that updated on C Limited. It all disappeared. All right. So tomorrow morning, the 11th, everything disappeared on that one. All right. So they're doing it tomorrow morning before market open. And the average move here is just under, what's right at 14%. Okay. Right at 14% for SE. And so you can expect a big mover there. All right. Now, another one is Comdex. Now, normally I don't talk much about stocks that are around $10, $11. These are sometimes gems, though, and this could be one of those. Comdex will declare on Wednesday, November 12th, before market open. The average move here is 26%. They are pricing in that move, too, right now. I priced it out just before we came on air, and they are expecting a big move out of this little $11 stock. Now, if I could get a straddle or strangle where my two debits, because you have a debit for the call and a debit for the put, you combine those together. If I could get it to where I could profit after maybe a 13 or 14% move, that would be a good opportunity on a stock like CorMedix because they're expecting a big move out of this stock. All right. Now, the home builders will start announcing, and we lead off with Beazer. Beazer will have earnings on Thursday, November 13th. After market close, the average move here is 16%. Now, 16% for a $21 stock is, that's moving. You're talking about a $5-6 move for a $21 stock through that earnings announcement, and that's pretty volatile. We'll get a good idea of what is happening with home builders. Now, I'd like to see others like Toll Brothers and other major, D.R. Horton and others declare, which they will be declaring upcoming. But we're going to start off with Beazer here that will declare on Thursday and just kind of see where this end of the market. Beazer is not a high-end builder. They are mid to low. So we'll see where that is. And interesting discussion on 50-year mortgages surfacing. Okay, President Trump tweeting about that, and there's some definite pros and cons to that. But for those that subscribe to our publications where we do send out these trade alerts to everybody, we have been talking about that on our insider show that is done Thursday nights between my colleague Rob and I, and we will talk quite a bit about it probably this week as well and highlight some details. All right, we close out the week with a couple of names here that you might not be familiar with. Twist Bioscience. Now, we have a general rule in trading. You've heard the term "don't do drugs." Well, we don't trade drugs, okay, except through earnings announcements because it is so hard to trade these companies with approvals and denials and developments and lawsuits and all the things. But through earnings, that's nice because it's expected and a pattern develops. And you can see that there has been a little bit of volatility in this stock through earnings. I mean, these are pretty big moves for what was a $40 stock and then a $30 stock and now still a $30 stock. And I do like this little consolidation pattern that's appeared here before the earnings announcement. So this will be Friday morning before market open. The average move here is about 15%. All right. So definitely one to watch is Twist on Friday morning. All right. Now another one on Friday that this is one to watch. Definitely not to trade, but I wanted to address it because it's been on every different source like Yahoo or different charting packages. They are unsure of when the earnings announcement is. It's going to be on Friday before market open. However, it's going to be a non-event because, as you can see, as I labeled this, Charles Schwab agreed to buy this company, Forge Global, to boost its private markets offerings. All right. So whatever business decision they made, but you can see this was a $26 stock, and talk about a nice bid. All of a sudden you gap up to, the offer is at 45. So it went up to 44 and now it's just going to go sideways. The reason it doesn't go right directly to the buyout price is called a risk premium. Okay. So there's a little bit of risk premium, but not much that remains, as this stock, as you can see, is at 44.12 right now, and it will slowly creep up to that 45 point. But there's now no volume or open interest in the options, everything, not one to pay attention to. So this is why you have to pay close attention when you just see something on a chart, or, hey, it's got earnings coming up and, maybe I should trade that or whatever. You got to look into the underlying. And I could tell right away whenever I see a gap and then two itty bitty candle bars there, that is a buyout. All right. And sure enough, as we go in to look to see what happened with this company, they the reason why I include them, because you can see they were a mover. Look at this. Stock went from literally about $17 to the next day $21, 22 overnight. I mean, that's a big move for a $17 stock. And it's been a mover before. So it's finally had its last hurrah, but it will not have, yes, it will have earnings, but it will pretty much be talk about the merger or the buyout with Schwab and moving forward. All right. So one last stock to talk about, and this is an honorable mention. And I do this because it is a popular stock, and that's Applied Materials. All right. Now, they didn't make the list this week because, as you can see, it's right there in the middle. It's 9%. So yes, that's a single digit, but it's close to 10%. And, that is our line for these breakout opportunities. So you're kind of caught in the middle. But here's the thing. This is a $230 stock. So an Iron Condor, you could probably get your break evens on an Iron Condor 12 to 14% away from the money. Okay, meaning it'd have to move 12 to 14% to get above or below your break evens in your trade. However, this is Applied Material, and they could utter those initials AI, and it could ruin your day. Okay, that's why I priced out a Straddle and Strangle. They're pricing in about a 10% move here. So it is definitely one to watch and probably listen to the earnings call. So, but it's a popular company and one of the familiar names that we have for this week. So I wanted to be sure, and we included this in our list for this week. Otherwise, it's a pretty quiet week. All the other stocks, we have, as I mentioned, over 600 companies declaring earnings. We're focused on about 40 of them. What about the other 500 and change? Well, those, believe it or not, a lot of them are priced at $2, $1. They're small cap stocks, lots of small cap, maybe even mid cap stocks declaring earnings this week. So a lot of them do not fit our criteria, which obviously they have to have option volume because we're trading options on these. They have to have certain criteria. And so we just have to kind of move on from them and focus on the key ones that give us opportunity each and every week. So speaking of opportunity each and every week, I give out a trade on this show each and every week. And we've had a pretty darn track record. We've only had, we did have a small loser 2 weeks ago, but guess what? We're back on the winning path. And so let's jump over to our trade from last week. We'll start with that. Our trade from last week was on Supermicro Computer, SMCI. And this is what I'm talking about when we talk about these breakout stocks. So here is the trade setup. It was a little, what I call a baby strangle. And baby strangle is when you do a call at, say, on this stock that was trading, this stock was trading around $52. So you do maybe a 53 call and a 51 put instead of doing it like $5 or $8 out of the money above and below. You do it kind of right next to each other. I call those babies. So these are baby strangles. I like the pattern here. We were kind of forming a wedge on the stock price going into that earnings announcement. And so we put this trade on Monday. And how did this trade perform? Well, it did very nicely for us. Just 2 days later, we had the earnings announcement, and the stock dropped considerably. And we had a very nice profit on this stock of $429 was our profit per strangle. Okay. That's an 81% return on risk. So based upon the risk in the trade, which was just over $500, okay, we returned a profit of $429 on that $500. So a nice 81%. Now, last week I talked about what the impact to portfolio was. Okay. And I talked that our trade last week lost 1.6% to portfolio, something like that. This trade, because we are using a hypothetical $10,000 account, that's a 4.29% return on portfolio in just 2 days, returning 4%. Okay. So overcame that loss from last week, back on the winning track this week. Very nice trade going into, but this is an example of a breakout stock. Okay. And using straddles and strangles around those. We do those through a strategy at ewotrader.com called Delta Neutral Breakout. And that is where we do trades like this. Now, we do another publication called Delta Neutral Income. And that type of trade I have for you as our trade of the week coming up right now. This week, we are focused on Cisco. All right. Cisco will have earnings later this week, as we talked about. And a Iron Condor is going to give us the best opportunity to profit. Now, Cisco, it is in that kind of tech space. It can possibly move a bit, but the thing is that the options we're using do expire this Friday. So this Friday is when those options expire. So the stock's not going to have very much time to move. This is an Iron Condor. This is what it looks like when you put the risk graph, overlay it on a stock chart. Okay. I'm looking at the black line here. You can see it looks like a square around the stock price. Every angle that you see, every direction change in that black line represents a strike price where we're either buying it. Okay, buying this one, we're selling this one, we're selling this one, and we're buying this one. Okay, calls on top, puts on the bottom, selling them both, selling a call spread on top, selling a put spread on the bottom. You take in a credit, we're keeping that credit. The credit here is about $120 per spread. Okay, that's the maximum profit we can make. And before you say, well, that's not very much, just realize we're talking about being in this trade for a maximum of 4 days, and that could possibly be a 1.2% return on risk if it's a maximum reward type of situation, which we try to do with these types of strategies. Okay, with this particular strategy, we try to keep that entire premium. Now, if it challenges that break even either above or below, then we address that and we deal with that. Okay, and we provide the alerts. If you're a subscriber to our Delta Neutral Income portfolio, I provide the entries, the alerts, the updates, and the exits on every trade that we do. Okay, but this, again, if you know how to trade this type of strategy, then this is our trade of the week and another good opportunity for profit. So it'll be very interesting to see how the week turns out, given we're still in the government shutdown. Yes, there's rumors that we'll have a reopening, but who knows? All eyes are going to be on these earnings announcements. Feel free and download our free gift to you, which we provide one each and every week, ewotrader.com/straddle for a guide on how we do these breakout stocks. Okay. If you want to know how I do them and what my formula is, I have it in a free guide. So download it today. And I will be here each and every Monday to talk about earnings. We do it every week. So everyone have a great trading week, and I will see you again next week.